How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel, as many of you know, dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, if you've been following along on this journey thus far, you'll have noticed in the last handful of videos, my account has been hitting record high after record high after record high, stemming from all of the market momentum that is being built from beautiful earnings reports regarding companies across industry verticals. And then boom, as Wednesday of last week, the Labor Department announced that, well, there's inflationary news we should really be prudent about here, because the consumer inflationary report showed that the consumer price index has surged by 6.2%. Now, what exactly does that mean? It means the price of goods is going up, the value of your dollar is going down, and so ultimately there's madness in the market at this point. I do certainly believe that this is all only transitory, so for the long-term value investor, yes, this is an opportunity for us all to actually invest, doubling down on high-quality stocks. Now, in terms of my account update, we're sitting at $83,098.74 on the day. That's up by $1,138.43 from my last video. Again, not a new record high, but I'll take it. Now, in terms of today's video, I want to talk about 4 stocks that I've been personally doubling down on, or will be doubling down on this week. A video you're not going to want to miss out on if you're that long-term value dividend investor. Now, just before we dive in, go ahead, tap on that thumbs up button, as it greatly helps me out in growing this channel and getting the word out there. Smash that subscribe button for me, because I want each and every one of you along for this journey with me. Now, YouTube, let's go ahead and dive right in. All right, so just right off the bat, I'm gonna lob this out there for all of you and just be upfront and honest that the 4 stocks that I'm about to talk about are nothing new to the Blue Lion Finance channel, and they certainly should not be new to you. These 4 stocks are just bigger blue chip plays that have consistently delivered on not only dividends, but growth over time. That's exactly the type of stock opportunity I'm looking to get into. I'm not gonna sit here and share with you that you need to get into the newest, the latest, hottest, sexiest companies that are IPOing, or this one's going to 10x.
Whoa, very nice.
Sometimes, at least in my opinion, it's all just doubling down on what works and growth over time. I mean, consistency and patience. Rome wasn't built in a day, so let's jump into it here by starting off with Stag Industrial, ticker symbol STAG. Stag Industrial is a REIT, a real estate investment trust that I actually just spoke about. And if you want to get more in-depth information on Stag Industrial, click through to the tag above. Nonetheless, I think what you need to know for today's video is that Stag Industrial was founded back in 2010 with a focus on acquiring and operating industrial complexes, that being things like distribution centers and warehouses. They have clients that are ranging from Amazon to FedEx, companies that are not going anywhere anytime soon, which is exactly why I wanted to get into Stag Industrial. Now, prior to last week, I only had 4 shares of this company. It was a brand new position for me, but as they continue to build this beautiful portfolio, they're currently sitting at 517 properties in 40 states. They've come a heck of a long way since 2010, and given the e-commerce way of the world, I only believe this particular company is just going to continue to grow. So last week, I went ahead to pick up 1 more share of Stag Industrial, bringing my portfolio total of Stag to 5 total shares. I picked up that share for $42.69 as it dipped from around $44 down to around $42. Now, analysts only believe that Stag Industrial is going to continue to grow, coming in at a median stock share price of $46 per share. So of course, they believe it's going to rebound, and even then some, at a high stock share price of $54 per share. And until it reaches those high stock share prices, I can kick back and relax on Stag Industrial's dividend, as it's currently paying out a dividend with a dividend yield of 3.42%. Now, the next stock I bought into last week was Medtronic, ticker symbol MDT. Medtronic is another company that, again, I spoke about, but I'm mentioning it again because it is right now undervalued. When it comes to Medtronic, they're a medical technology, service, and solutions company founded back in 1949. They have seriously just been paving the way into the healthcare future. for all of us, saving lives along the way. Now, they are one of the world's, actually the world's almost pure play medical technology company that you can invest in. So this is just a powerhouse opportunity for value investors to jump into. And as a dividend investor, this is a dividend aristocrat. I'm talking about a company that's been paying out dividends for 44 consecutive years and increasing those dividends year over year. So talk about a company that I personally want and enjoy in my portfolio. Medtronic definitely checks off all of the criteria of a company that I want to get into. Now, in the most recent news regarding Medtronic, they fell from around $135 per share to around $119 per share. That's about a 13% dip, but a ripe opportunity for long-term value investors like myself to go ahead and pick up a share while it's on a discount. That is exactly what I did last week, picking up one share of Medtronic for $119.55, taking advantage of this opportunity. Now, analysts only believe Medtronic's not only going to rebound, but continue to grow, coming in at a median stock share price of $148 per share and a high stock share price of $155 per share. Just a ripe opportunity for us to reap the benefits of getting invested into a high quality company like Medtronic, all while collecting on their dividend that is currently at a dividend yield of 2.06%. Then the next two stocks I want to talk about are actually not companies that I bought more into last week, but this week I definitely plan on buying more shares of both of these companies. The first of which is Johnson & Johnson, ticker symbol J&J. And to my loyal fan club out there, I am absolutely only continuing to double down on Johnson & Johnson, forever buying this company because it is one heck of a dividend gold mine. When it comes to Johnson & Johnson, we all know it's got a 130 plus year history of just driving the healthcare industry forward through three different segments, that being medical devices, pharmaceuticals, and consumer goods. Now, most importantly is that Johnson & Johnson recently announced, as of this past Friday, they're going to be splitting Johnson & Johnson up into two different companies. This is incredibly exciting because one of those companies is going to be focused on pharmaceuticals and medical devices, whereas the other is going to be focused just on consumer goods. Now, I believe that is just the best possible thing that can happen for Johnson & Johnson because they've had a lot of trouble regarding their consumer goods, yet they are leading the way in terms of medical devices and pharmaceuticals. So I'm only just projecting continued high quality growth here for Johnson & Johnson. Analysts are projecting the same growth. Looking ahead, we can see that Johnson & Johnson is coming in at a median stock share price of $183 per share and a high stock share price of $215 per share. It's currently at around $165 per share. So talk about growth. Johnson & Johnson has it. Until it gets there, we're just collecting on an amazing dividend with Johnson & Johnson's dividend yield sitting at 2.58%. And last but not least here, we have Lockheed Martin, ticker symbol LMT, just another company that I've been buying up rather recently and talking about a whole heck of a lot. It is an American aerospace arms and defense company that was founded back in 1995. It's been dominating its industry ever since, of course, with worldwide interest securing government contract after government contract. And government contracts are honestly one of the safest out there. These are 5, 10, 15, 20 plus year contracts. So you should feel absolutely safe when investing in a company like Lockheed Martin. Now, in most recent news, their Q3 earnings reports came in below analyst expectations, which of course spooked a lot of shareholders. Their stock actually fell from around $377 per share to around $339 per share, presenting about 11% worth of a dip and an opportunity now for an investor like myself to go ahead and pick up more shares while they are currently undervalued. We are talking about a company that just secured a US Navy contract, a US Air Force contract, and a partnership with NVIDIA. This is definitely a company you're gonna wanna be invested into for the long haul if you're a value investor with long-term sights on making long-term gains. This is your company with Lockheed Martin. Now, when taking a look at analyst expectations, we can see they're coming in at a median stock share price of $378.50 per share and a high stock share price of $450 per share. Now, as an investor in Lockheed Martin, we get to take advantage of Lockheed Martin's dividend, coming with a dividend yield at 3.08%, which is right in the sweet spot for a dividend investment that I'd like to make. Now, that is it, YouTube. From Stag Industrial to Medtronic, Lockheed Martin, and Johnson & Johnson, all companies that I'm going to be doubling down on this week, throwing a ton of money into all of them. If you liked what you heard, you learned something new, comment below with your thoughts. I'd love to read through them. If you're going to invest in any of these companies, I just want to encourage encourage you to do your own due diligence. I'm by no means a financial advisor, but certainly go ahead, tap on that thumbs up button as it helps me grow the Blue Line Finance channel and get the word out there. And of course, if you haven't already, join me on this journey by subscribing. Go ahead, tap on that subscribe button while you're at it. Now YouTube, until the next video, I will see you all there.